Hello, Nikita. Good morning. Good evening. We are just waiting for 3 to 5 minutes further so that everyone can join it because strength is increasing. So we will start after 3 minutes. Hello and Assalamu alaikum. I am your tutor, Arsalan Shabir. Hello, Nikita. Hello, Vijay. Hello, Ashish, Anusha, Krishnanthan, Ashish. So, hello, Vismay. So today is the last day for this session. Obviously, I will miss you after the today's session. Uh, uh, First of all, we discussed about the yesterday's session. What we have discussed about the ethics. Yes, obviously, we have discussed about the ethics. We have discussed what is ethics, what is moral values, who will decide this thing. So a little a little bit glimpse I am going to tell you. Like we have discussed about the moral principles. If you take any decision for the public interest, it means you have done a good decision and you are an ethical person. So if you do a decision for your self interest over the cost of the public interest, so it means like you think about yourself and you done an ethical decision. So if you have any guidance available, if you have any guidance available about the about anything, like if you want to take any decision and the relevant guidelines are available, like international accounting standards, like international standard on auditing, or any legal guidance available, then you don't need to think about to take, what the decision should you take. So you will just based on the guidelines need to take the decision. The question was very important when we have discussed last day, that when the issues will beyond the legal guidelines, it means when the guidelines were not available, then what's the decision should you made. So it's all about the ethical decision and your moral values. It's all about your ethical decision and moral values. So we have discussed about the fundamental principles of professional ethics. We have discussed it each and every one with detail. We have discussed about the types of threats which you can face during the audit engagements. So there are five types of threats, that is self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. So, Tilia, do you hear my voice? Do you feel any distortion? Hello Asif, hello Ammar, hello Karan, hello Vismay. So what about my voice? Do you feel any distortion? Thank you. Fine, fine. Okay, thank you, thank you. So these are the type of threats which we have discussed last day. So anyone if missed that session, obviously like someone of the, even most of the students were missed it because of the problem we had faced last day due to technical issues. But the recording is available and I have shared it in your WhatsApp group as well. So afterwards we have discussed about the uh, we have discussed about after the threads, each and every one we have discussed the threads, and then we have discussed what can be the examiner test you in the exams. So all each and everything we have discussed in the last class. So what about the today's agenda? Today agenda is about the reporting. So this is a very important topic for the exam point of view. Examiner will ask on this topic in each attempt approximately. So this topic is also very important. And even if I would like to tell you, uh, in each days, or you can say in every day, the 5 day session, we have discussed the topics which are very important, which are very crucial. So you need to be give a very good focus on these topics like audit risk, internal controls, ethics, and इसके अलावा जो है वो like you can say audit reports हैं. So supplementary procedures हैं. All are the topics are very important. So today is the last topic, which is the audit reports. So now we are going to discuss it. Before going to the audit reports, we are going to discuss what is materiality. Now, what is materiality? Anything, anything which has the significance and can impact on the financial statements and the user of the decision. So anything which has the significance can impact on the financial statements and the user of the decision. So this is the generic definition of the materiality, but I will give you the explanation what is mean. Suppose you are a student and I am obviously a professional person. If someone steals $200 from my pocket, and the same theft, or you can say someone steals $200 from your pocket, from your pocket. So maybe you can say okay, $200 does not impact me. It's not a big amount for me. But as a student, but as a student, if someone steals from you $200, it really impacts you because it may be the expense for you, it may be the expense of the whole month for you. But being a professional, I am a professional and senior person obviously, so maybe because based on my earnings $200 is nothing for me. But for you $200 is a big amount. It may be your full month expense, it may be your fees. So anything which has a significance and can impact on the financial statements and user of the decision. So here I would like to give you a focus on one thing. I would like to give you a focus on one thing, that this concern, this materiality is vary from case to case, from person to person, from company to company. Like this, I have given you the example. I have given you the example of the $200. Someone steal $200 from my pocket, and someone steals $200 from your pocket. It is nothing for me. It does not give me the impact, but it gives a huge impact on you, because it may be the full month's expense or maybe your semester fees. So the neutrality is not a standard format, is not a standard thing for each and every one, for each and every company. It varies from person to person, it varies from case to case, it varies from company to company. So what is an anything? Now we are going to discuss what is anything. Sorry. So what is anything? Basically, read this. Misstatements due to error or omission are considered to be material. Now I am giving you the uh, clear definition. This is the materiality journal definition. Now I'm giving you the definition from the perspective, from the audit point of view perspective. Misstatements can be due to error or omission. Due to error or omission are considered to be material if they individually or in aggregate could reasonably be affected the financial statements. Individually or in aggregated, we are going to discuss in a later stage, but any mistakes or any errors which are considered to be material. Suppose if there is a some amount, okay, let me complete this first general definition, then I'm covering this in the next stage. Okay, so here misstatements can be due to error or omission are considered to be material if they individually or in aggregate could reasonably be affected the financial statements as a whole. Okay, wait, now I am linking this with the next. I am linking this with the next text. Materiality can be in two ways: by amount and by nature. So misstatement can also be done by amount or by nature. So materiality is in two ways: by amount and by nature. So misstatements can also be done in two ways, that is by amount and by nature. If I will discuss you, if I'm give you one example, if I'm give you one example about the materiality, a materiality related to the amount. So what it is? So what it is? Materiality. There is a company that is multinational corporation, and on the other hand, there is a local company. Multinational corporation is working in different countries, and you can say all over the world, have a huge sales, have a huge profits, have a huge stock, and have a different variety of products, have a diversified business. Okay, and on the other hand, there is a local business which is working in a country, or even you can say working in a cities, on in a few cities. So if the stock of the multinational corporation, if the stock of the multinational corporation steal by the any if the stock of the MNC is you can say vanished, or someone thefted, or someone you can say take it from outside the organization, and the management do not know and does not know about the stock, and the stock is vanished, and the worth and the stock of the and the worth of the stock is 3 million rupees. Worth of the stock is 3 million rupees. Only 3 million rupees peak here. So maybe this 3 million rupees does not impact the multinational corporation who is working in different countries, different with dealing with different products, have a huge sales, have a huge profits, have a huge stocks. So if there is a small amount, very small amount is uh, vanished, a very 3 million stock is vanished, and management does not know where it has been gone, maybe it is not a worth amount for the multinational company. But on the other hand, this 3 million amount may be a very, very significant amount for the local company. So here what I am giving you, the technical point is materiality can be different. Materiality can be different based on the company size, based on the company operations. So materiality can never be same for each and every company. So this is about the materiality by amount. By first nature, first way is the materiality is by amount. So what is the materiality related to nature? What is the materiality related to the nature? So if the company if the company is not dealing with if the company is not dealing with the legal laws, if the company is not dealing with the legal laws, suppose I'm giving you the real example. In a country, I'm not taking the name of the country, in a country there is a very big telecom company, very big telecom, who which does not submits its tax returns, which does not submit its tax returns from a long time, and does not submit deposit the amount of the tax which is payable for the company, which should be paid by the company. But that telecom company which is working in a big radar, in a big you can say uh, in a big size. So but this company does not do compliance with the laws, does not submit its tax returns, and does not pay its payable tax. So what the government did with that telecom industry, government sealed all the operations of that company. What the government did with this scenario, that it's a official information, it's a published information, that's why I'm discussing it with you, that the government sealed that company. So that's the any event can be material. So by nature means, if you are not dealing with non-compliance, you are not dealing with the financial information, you are not dealing with the financial amounts, you are not talking about the sales, you are not talking about the revenues, you are not talking about the profits. Here where we have discussed in the materiality in the way of amount. So in this category of the materiality, in this category of materiality, you are not discussing about the financial related misstatements, you are here discussing the non-financial related misstatements which are not have any link with the financials, but these events can be a problem for the company. So materiality can be in two ways. Materiality is by amount, materiality is by nature. So there is any event which can convert the company's profit into loss any event. And what could be that event? That event means we are not talking about the any financial numbers. I'm not talking about the numbers. I am talking the any event. Suppose I'm giving you the one more example to give you a further clarity on the mutuality by nature. Suppose you purchase a product from the market, or you can say from the company, and you use it on yourself. After taking that product, your health is damaging continuously. Your feeling is not very well, and it becomes a bad problem for you. So the customer sues the company for their quality of the product. So this is the event. So this is the event, and the case is going on, going on, going on. So if the outcome of that case will negative, listen to me carefully. So if the case of that case, if the result of that case will become negative for the company, maybe it's a big amount, maybe the company's profit will become into the losses. So material misstatements can be in amount, and material misstatements can be by nature, because if the management does not disclose this event in the financial statement, it means it's a material misstatement. Listen to me, do not confuse anything. First, we have discussed materiality can be in two ways, that is by amount, that is by nature. Now I'm talking about the misstatements. Misstatements can also be done in two ways. If there is a case is going on, but the management do not disclose it, it's a misstatement. Or you can say management disclose the event, but in a very positive manner, which does not belong to the reality, which management disclose the disclosure, but it does not align with the real facts. It means it is the manipulation, it is the material misstatements, it is also the material misstatement. Okay, so on the other hand, if there is a misstatements in the amount, so it is also the material. So materiality can be in two ways, by amount, by nature, and misstatements can be done by the management, and misstatements can also be done in two ways, by amount or in nature. So this is all about the materiality. Materiality means which has a significance and can impact on the financial statements. So misstatements, it is due to error or omission, are considered to be material and could affect the financial statements as a whole. So after that, we discussed materiality. Materiality can be in two ways, by amount and by nature. By amount, we are also going to discuss in a next slide, and by nature, this is all I have write down the examples. So till yet, do you have any question, or do you need more understanding, or is it enough for you? Namra, I'm going to discuss the materiality thresholds in a later stage. That's why I'm not discussing here, because maybe I would like to take this topic in a very simple manner. Okay. Bilal, I will also tell the performance materiality. Let me conclude the session. Then maybe your all questions will be resolved in all my slides. So stay relaxed, stay calm, and listen to me carefully. Do not need more feedbacks. There are many students in my class. There I have received only few feedbacks. Please, everyone, write your feedbacks. So now we are going for to the next slide. Now, risk of material misstatement we have discussed in audit risk. What is risk of material misstatements, or what is material misstatements? So material misstatements, the difference in the amounts, it's a financial classification, presentation, and disclosures. Disclosures means events, which we have discussed in the first slide of the today's session. So difference in amounts, classification, presentation, and disclosures from the real facts. If the event is saying something, if the event says that it will be it will be the negative outcome for the company when the court will give the decision, but in your reports you are representing it in a very positive manner. So if the events are not aligned with your real facts, if your amounts which are showing on the financial statements does not correct with your real facts, with your real numbers, with your real records, it means there is a material misstatements in the financial statements. So financial statements should be correct in all perspectives. Financial statements should be correct in all perspective. What are the perspective? That is amount, that is classification, that is in presentation, that is in different disclosures which we disclose in the after the financial statements. So these are all the material misstatements which can be exist in the in the financial statements of the organization. So this is our second slide. Now, these are the thresholds which I am going to discuss. Mention in the question box who, how many are retakers right now in this session? How many retakers? Oh, many students failed at 48, 47. Oh, and most of them are retakers. Okay, I will give you a one suggestion. Uh, Obviously, listen this webinars, and make the practice. Try to pass a paper. This paper is not pass like other papers. Then this paper needs some technical and practical related experience, or you can say you can pass the paper with technicality. How you can save the marks, like I have told you in the I think in the second webinar in which we have discussed about the internal controls, where I told you to just copy paste the deficiency and why it is a deficiency. So I told you to just copy you do not need to think about the deficiency. You need to think about why it is deficiency. So just copy paste it. Just copy paste it. So in a same in our first webinar of the audit risk, I have told you just what is the audit risk, just copy paste it. How it is the audit risk you need to mention. So if you do this in two questions, so think about it, how much you can save the time. In the exam, you are wish that mm, uh, if I will if we give the examiner give you further 2 minutes, I will pass the paper, I will complete the paper. So in the exam, each and every minute is like a gold. So use these strategies to save the time. But before save the time, your practice should be good, your technical knowledge should be good, means your preparation is good, and after that your practice should be good. If these things are not good, if your preparation and practical knowledge is not good, then obviously you will fail because of your knowledge, not because of the time. So if the preparation is good, if the technical knowledge and practical knowledge is good and sound, then the second risk you will face is time management. So if you failed at your first risk, then how you face the second risk? So it's like a cricket match. You need to play one ball, first ball very good, then you have to face second ball. If you will not face the first ball properly, if you will out or on the first ball, then second ball will not longer relevant for you. So this is all about my recommendations. A very because the topic because I'm seeing that many of you are retakers. That's why I have given the suggestions again. So now come to the topic again. Financial neutrality we have discussed right now. In this session, please remember each and everything which is mentioned on the slide. In this session, in this webinar, I have mentioned many important notes in this slide. So there are two types of neutrality. We have discussed what is financial neutrality, or you can say by nature, you can say by nature, sorry, you can say by amount, and neutrality by nature. So financial neutrality means by amount, and second neutrality is by nature. So these are the thresholds which is standard for every organization. You listen to my words. These are the thresholds which is standard for every organization, but every organization has a different value. Every organization has a different sales. Every organization has a different level of expense. Every organization has a different level of profits. So amount will be changed, but the percentage will remain the same. Now, one question should become in your mind, one question should be strike in your mind, and you should ask this question from you, but the question is not raised till yet from your side. Now, tell me why these slabs are given. What it means. You will take the 5% of the profit before tax. It will be your materiality amount. Okay, I will open the Excel and understand and will give you the understanding with the example. But if I will calculate the materiality amount at this stage, at this level, only at this level, I'm just asking about the materiality amount, nothing else. So just give me answer of my question. Okay, 5% I just apply and find out the materiality amount. Here I would apply 0.5% or 1%, or 0.5% to 1% of the revenue, or assets. Why these slabs are given? So waiting for the feedback from your side. Pratik is the right answer. No, Akshay, I am asking why these two levels are given. Below this, obviously, immaterial, but why these two levels are given? Benchmark method, no. Seher, uh, partially right. Namra, need more feedbacks. Hurry up. Explore your knowledge. Write down here. I would like to see your Knowledge. Yes, Malik, you are right. It is according to the auditor professional judgment to decide between these two slabs. Okay. Material misstatement analysis. Yes, it is right. No, Namra. Current liquidity. No. Okay, don't need to worry. I'm here to resolve your issues. Professional judgment is the right answer, but I am here to give you the example. Okay, I will give you the example. Suppose I take one example. Profit after tax 5 to 10%. Okay, just remember 5 to 10%. So if the company profit after tax is equal to 1000. Now, if I'm at 5%, if you take the 5% of 1000 means profit, then what is the answer? I think it would be a 50 rupees. Okay, 50. If I will take the 10% of 1000, profit is 100. So these are the two slabs in which the materiality exists. In which the materiality exists. Now, what's the usage of this? What's the usage of this slabs? Now, first of all, you need to understand what it means by 50 and what it means by 100. If the auditor does not get, or if the, you can say, if the auditor didn't get evidence of any invoice of any expense, if the auditor does not get any evidence of any expense, so auditor can ignore it up to 50 rupees. If the auditor, like, there is an expense of anything, it is uh, like 40, there is an expense amount 30 rupees. It's a 30 rupees, and the auditor didn't get any supporting of it. Auditor didn't get any invoice. The auditor didn't get any approval of it. So this amount is immaterial. So this amount is immaterial means auditor, listen to me, I'm going to tell you in a very simple way. Auditor ignore this amount because auditor can only ignore these types of problems or these type of misstatements up to the worth rupees 50. When the amount increase from that 50 rupees, when the amount of these type of expenses increase from that 50 rupees, it will become suddenly it will become immaterial. Suppose another expense, the cost of this expense which audit does not didn't get any supportings, any authorizations, another is for 10 rupees. It is still 40. It is still 40. It is material or immaterial? It is material or immaterial? Guys, give me your feedbacks. Yes, I need your feedbacks in a hurry mode, please. Like, so that I am Mm, okay, thank you. Now again, auditor get another expense which the you can say which the who has the words rupees 30 uh, 40. Now what's that total? Total is 80, but if the auditor sets the 50 rupees materiality amount, and now it will become the 80 rupees. Now it become material. Now auditor need to decide what to do with this, or it will adjust it or discuss with the management. If the management does not resolve the issue, then what should be the auditor's action will be discussed at a later stage. So here the auditor think about so the here the auditor think about what to do. He can't ignore it. Okay, can't ignore it. I am just giving him the example. If the auditor sets the 5% materiality of the profit after tax. So where the auditor sets the 10% of the materiality. Suppose here the auditor sets the 10% of the materiality. So all these things are still so all these things are still immaterial because the materiality level is 100 rupees, means auditor ignore more mistakes. Here auditor ignore less mistakes, ignore less mistakes. Here the auditor can ignore more mistakes, more mistakes. Okay, here the auditor ignore more mistakes. So it is still immaterial. So when it will become material, if we receive the invoice of further 50 rupees, it will cross the 100 rupees. So the auditor now think about at this stage what to do or what not to do. So the auditor can't ignore it. So there can be a one invoice. Maybe it is an individual transactions. If we accumulate it, it will become significant. It will become significant if we accumulate the individual transactions, and it will become, or if you can say if we aggregate these individual transactions, it will become material. Or if there are not individual transactions, maybe there is a one total transaction, it is a one complete transaction. It can be of it can be of it can be of possibility 200 rupees. So it is material. So materiality, now wait a second, and I'm going to give you a focus on one thing here. Yes, so now read this statement. Misstatements can consider to be material if they individually or in aggregate, when there is a single transaction or when there is a combination of transactions, could reasonably be affect the financial statements. So we have discussed that there can be a two slabs, 5% and 10%. In 5%, auditor ignore less mistakes, but the mistakes, you can say misstatements. Here you can say ignore more misstatements. Now guys, I am going to tell you when the auditor will decide they will take 5% or 7% or 8% or 9% or 10%. I'm going to tell you, but before that, are you able to understand what is materiality, what is materiality threshold, and when at what level auditor can ignore the mistakes individually or aggregated? So, do you understand this thing? Oh, getting a very good feedback. Thank you, boys. Thank you, girl. Now I'm going to tell you uh, the the why the difference between the threshold. Namra, I'm going means I am here to tell you there is a threshold that is 5% of profit after tax, and 1000 is the profit. You calculate the 5% of the 1000, that is 50 rupees. It means auditor, there are many misstatements exist in the financial statements, but up to 50 rupees auditor can ignore the material mistake. Auditor can ignore the misstatements because it is immaterial for the company. Suppose here this is the materiality amount of the company's 50 rupees, and you got the expense which does not have any evidence, which does not have any approvals. It is it is just booked in the financial statements. There is no supporting behind the financial statements. So 30 is the material, 30 is the misstatement which exists in the financial statement, but it is immaterial for the financial statements for the organization, because because up to 50 audit company can, or you can say auditor can ignore these misstatements. But when these misstatements uh, aggregated, it will become more than above from the 50, it will suddenly material for the auditor as well as for the financial statements. So you can calculate the materiality on 5% and on 10%. But who will decide what are the bases when you will take 5% and when you will take 10%, or when you will take from I will write down it, I think here. So who will decide and what will decide whether we will take 5 or 7 or 8 or 10%? Now, remember my topic, my first topic, audit risk, in which I told you audit risk is equal to, audit risk is equal to, and please enter in the question box, audit risk is equal to, audit risk is equal to inherent risk into control risk into detection risk. Very good, Midhat. Your answer is right. Anusha, your answer is also right. Yes. Harshani Ammar, yes. Very good. Everyone remembers the, yes, Namra, very good. So everyone remembers the topic. Audit risk is equal to inherent risk into control risk into detection risk. So tell me one thing based on your knowledge. Open your question box. My question is, if the audit risk is high, if the audit risk is high, means there are many possibilities that the financial statements are materially misstated. You will select less threshold for materiality or greater threshold for materiality. Less threshold means you will ignore less mistakes, less misstatements. You will ignore less misstatements, and more threshold means you will ignore more misstatements. So when the audit risk is high, your materiality threshold will be minimum, will be less or more. When the client is risky, when there is an audit, when the audit risk is high, what should be the auditor do? Auditor will take less threshold or more threshold. Karan, you are wrong. Bilal, you are wrong. Everyone says yes, more. Parath, you are wrong. Need a fundamental change in your concepts. Who is thinking more? Need more feedbacks. Boys, guys, please, girls, please mention your feedbacks here. My question is this: if the audit risk is high, what should be the auditor do? Auditor calculate the materiality at less threshold or more threshold? Barbara, no, you are wrong. You are wrong. Yes, everyone. I would like to ensure like everyone is understand what I'm trying to give you a knowledge. I'm going to give you a uh, now. Okay, only 3%, only three candidates are required to understand. Here is 50. 50 means auditor ignore the expense who does not have any supporting. This is a fake expense. You can say it's a fake expense. So when the auditor says I will ignore only 50 worth rupees invoices which are fake, over and above I will discuss with the management or adjust these invoices, okay, or exclude these invoices from the financial statements over and above. So here you only give the compensation. Now understand from this perspective, auditor here gave the compensation to client only 50 rupees. Like you can do the mistakes only worth rupees, maximum 50 rupees, okay, that is 50. Over and above, management need to adjust it in the financial statements. Here you are giving the compensation, you are giving the relaxation to the client of what rupees 100. Like you have the license to do the misstatement of 100 rupees. So here when the audit risk is high, you will give the more compensation or less compensation. Will give me more relaxation or less relaxation. Now the candidates who were wrong, now tell me what's your opinion, what's your suggestion. Oh yes, Namra. Now you understood. Less you will give the less relaxation. So if you will give the less relaxation, you need to apply less threshold, less lower side of the threshold, lower side of the threshold on the in the calculation. Thank you. So everyone understood. Now the remaining my question is still unresolved. When the audit risk is high, it's all about the auditor judgment. It's a matter of judgment. It's a matter of judgment. Like it's totally up to the auditor decision based on their professional experience and judgment. He can take 5%, he can take 4%, he can take 6%, he can take 7%, he can take 8%, he can take 9%, he can take 10%. But the auditor should remain between these two slabs. And what should be the slab? It's all about the audit risk. If the audit risk is high, auditor will select the 5%. If the audit risk is low, then the auditor will take the 10% of the threshold. It means auditor will give the more relaxation. So that's all about the threshold, which I would like to give you an understanding. Okay, got it? Good. Now, actually, the students who were wrong, that's the mistake. People feel like he will they will take the more threshold. Actually, when the client is riskier, you would take less threshold. When the client risk is low, you will take more threshold. It is inversely proportional. It is inversely proportional. Some student mentioned this, and it is right. Yes, Vijay, you are right. Okay, now we have discussed what is performance neutrality. What is performance neutrality? Come to the point again. Now I will tell you, based on the audit risk, auditor needs to select these materiality at 5%. That's the threshold. Okay, 5% of PAT, profit after tax. Based on the auditor need to select the maturity at 5%. But here, listen to me, Namra, specifically you and Parath and one person more. Now, but auditor feels that's the threshold. Remember, 5 to 10%. But auditor feels he will not give the relaxation of equal to 5%. He will not give the relaxation up to 5%. He's much more concerned with the audit risk. So based on the auditor experience and judgment, auditor will select or will finalize the maturity level of much more lower of threshold, that is that is that is 3%, that is 3% or 4%. That is performance materiality. When the auditor had decided when the auditor feels when the auditor decided the materiality based on the audit risk and their judgment, and it should be 5% of profit after tax, but the auditor feels it is still not enough, and he is not ready to give the relaxation up to 5%. So it will reduce the more threshold. So when they will reduce the more threshold from the decided materiality level, so this materiality level is called performance materiality level. Performance materiality level. Now, you people understood what is mean by performance reality? Is there any confusion? Need feedbacks? I would love if you are active more, if you are active more from me. Need your feedbacks, please. Understood the performance neutrality? Understood the concept of performance neutrality? Do you hear my voice? What about the others? Do you understood my concept of performance neutrality? Okay. Thank you, Stephen. Stephen, you should do a message whenever I ask you. Yeah, I want to see your message in every reply, in reply of my every question. Brian, Anusha. So, what is the performance neutrality? Performance neutrality is when the auditor decided the much more lower threshold from the decided threshold. If the auditor thinks that the based on the audit risk, based on the audit risk and judgment, the threshold of the mutuality will be 5%, but auditor is still not ready to give the relaxation of this decided threshold 5%. So the auditor reduced the threshold from the decided threshold, that is 5 to 10% of the profit after tax. The auditor will take 3 to or 4%. So when the auditor reduced the materiality level from the decided thresholds, this called the performance neutrality. So there the audit risk is more reduced by using these thresholds. Here the auditor is not giving any relaxation to a client. Here the auditor is giving only 3 to or 4% equal to relaxation. Now, I have mentioned the important note. If the audit risk is high, you will use lower side of the threshold to reduce the risk. Okay, okay. What is performance neutrality? Is the amount set by the auditor at less than the materiality level for the financial statement as a whole to reduce the risk of material misstatements. So that's the performance neutrality, and that is the important note. If the audit risk is high, you will use lower side and vice versa. Okay, so it is inversely proportional. It is inversely proportional. So why you will use the performance neutrality? I have given you the example in a very good words, in a very good phrase. First of all, you people tell me what's the benefit of using the performance neutrality. The benefit of using the performance neutrality, the benefit of using the performance neutrality is that the audit manager is reducing the risk. Audit manager is not giving the relaxation to the audit client, so so the auditor is reducing the risk of audit risk. So auditor is reducing the audit risk. So that's the benefit of using the performance materiality. If you are not giving any relaxation, then it means your audit report will be much more reliable if you are using the lower thresholds, because prevention is better than correction. If you give the more relaxation, more thresholds, you will ignore the more misstatements, then maybe it will be a negative impact after issuing the financial statement. So at the start, you use lower thresholds as a prevention measure to reduce the audit risk. So this is all about the neutrality, calculation of the neutrality, what is the performance neutrality, what is decided per neutrality, or if you and why you use the performance neutrality. So this is all about the materiality topic. Now, yes, this is also very, very important topic, because students are very much confused. So, so here, this slide need to be listened in a very careful manner, in a very careful manner. So I use the highlighter for this slide. Thank you, Anisha. Now, now, you students always use the modified report, modified opinion, unmodified report, unmodified opinion. You, the students does not have the knowledge between these two terms. These two terms are not equal. These two terms are not same. More opinion is something else and mod report is something else. Now at this slide we will discuss at this in this slide we will discuss and try to identify the difference between the audit report and the word opinion. Okay, who has the confusion between these two terms? Mention in the question box. Which student has the confusion? Okay, Sahar or G. Okay, I will not use the names, but don't worry. I am your teacher. I'm your tutor. We are working together. We are working like a team in WhatsApp group. Everyone is a team member. Every participant is a team member. I am your also team member. Many students ask the question, but today will be our last day. So after that, I will free from this commitment. So I will be available for you. I can assist you. So now, come to the topic again. Basic elements of audit report. I am talking about the audit report. Focus on this word. I am not talking about the opinion. I am not talking about the opinion. I am talking about the report. Now, also need to focus. There are two types of companies, listed and unlisted. Listed and unlisted. Sorry. Right. Wait a second. There are two types of companies, listed and unlisted companies. So you need to focus in the question whether the question is whether the question related to listed company or not related to listed company. So if the company is listed or unlisted, I have mentioned in the slide, if the company is listed or unlisted, most of the elements are same. Title, addressee, to whom the report to whom you can say addressee means the client's name, the client address, opinion paragraph, basis for opinion paragraph, material uncertainty related to going concern paragraph. I mentioned if there is any material uncertainties mentioned in the extract of the question asked by the examiner, if the material uncertainty symptoms is available in the extract, then you need to mention this paragraph. Otherwise you don't need to mention it. Okay, you don't need to mention it. This is a conditional paragraph. This is a conditional paragraph. Now, the next paragraph is key audit matter. If the company is listed, then the key audit matter CAM paragraph will be the part of this report. And if the company is unlisted, extraordinary matter paragraph will be used for unlisted. But these are not conditional. It is a part of the report. It is the part of the report. Material uncertainty is the conditional paragraph. Material uncertainty is the conditional paragraph. It is not the part of regular part of the report. Other information paragraph, responsibilities of management, responsibilities of auditors, other reporting responsibilities, engagement partner, name, signature, and address, and date of the report. And date of the report. How the examiner tests a question, it will be discussed at the last slide of this session. But here, focus on the things which I'm going to give you which I'm going to highlight. I highlight another important note. Key audit matter paragraph is for listed company. Extraordinary matter paragraph is for non-listed company. So remember this: if the company is listed company, which paragraph is part of the audit report? Key audit matter paragraph or extraordinary matter paragraph? Mention in the question. Mention in the question box, please. Everyone, please mention. I would like to write down it by your hand so that you will never forget it in the exam. Yes, it is in the favor of yourself. Please write down it. Key audit matter paragraph is for listed company. Key extraordinary matter paragraph. No, Barbara. If the company is listed and mentioned in the question, then which paragraph is used? That is key audit matter paragraph. Now, come to the another point which I would like to remember, which you should remember. That is, you remember the sequence of the report. You need to remember the sequence of the report. You need to remember the sequence of the report. You need to remember the sequence of the report. It can be asked by the examiner. Examiner will not ask you to redraft the report. Examiner will not ask you to redraft the report. Examiner will not ask you to redraft the report. Examiner will ask you to write down the sequence of the elements of the audit report. So you should remember the sequence of the report. Please write down it on your some notes on your mobile. So it is important. And key audit matter paragraph is for listed company, and extraordinary matter paragraph is for non-listed company, unlisted company. Now I would like to clear the one thing more which you have a confusion for a long time, and I can understand your problem because I have had the same confusion at my stage. Opinion paragraph is the part of the audit report. Opinion paragraph is part of the report. How many opinions are there? We'll discuss at a later stage, but at this stage, we need to understand what is the opinion paragraph, and it is a part of the audit report. So you can say audit report is a bigger element, and opinion paragraph is a narrow element. Audit report is a broader term, and opinion paragraph is the part of this audit report. So you people can understand what I am saying. So for this, I also mentioned another important note, that is reports include opinion plus paragraphs, opinion plus paragraphs, and paragraphs going concern related, it is conditional. If the company is listed, then obviously key matter, otherwise extraordinary matter paragraph, these paragraphs. So reports include opinion plus paragraphs. So finally, we have resolved your problem. A report is not equal to the opinion. Report is not equal the opinion. Now, students, your feedback, please. Thank you, sir. Many students of this session is very much active in the group as well as in the session in the webinar. So thank you, Harshani. Harshani. Maybe maybe I'm not saying the correct names, but I'm trying my best. So don't worry. So uh, you can understand it. You can understand this. It's maybe obviously a language problem. You can say obviously it's not a regular names for us obviously. Anusha, send me your contact number. Send me a message on my contact number. I will add you. 92345447 999. Now, so what are the important elements in this slide? You need to remember the elements, the sequence of the elements of the report. You need to remember that key audit matter paragraph is for listed, the extraordinary matter paragraph for unlisted, material uncertainty related to going concern. We are also going to discuss in our next slide. So it is conditional. In reports includes opinion plus paragraphs. So report is not equal to opinion. So when the examiner asks you about the audit report, think about it is asking about these elements. When the auditor asks you about the audit opinion, it is asking about the types of opinion. So uh, and please remember this. Now we are going towards the next slide. Yes, here there is also a confusion among the students in the types of reports. So it is also very extracted. It is also very drill slide. You afterwards, inshallah, you will not need to understand this topic specifically. So types of opinions. There are two types of opinions. There are two types of opinions. That is unmodified and modified. So we are going to discuss the first option, that is unmodified. That is unmodified opinion. Auditor gives the unmodified opinion. First of all, we try to understand what is unmodified opinion. Unmodified opinion means it's a clean opinion. It's a that the opinion does not. It's a clean opinion means that the auditor in which the auditor states that the financial statements show true and fair view. Auditor shows that the financial statements show true and fair view. Okay, it's a clean report. There is nothing to worry in the financial report. Financial report is clear. This is about the unmodified opinion, and when the auditor gives the unmodified opinion, when every misstatement, when there is no misstatement in the financial statements, or there is a misstatements in the organization but they are very immaterial, or you can say they are below your thresholds. So these are the immaterial misstatements which does not affect the company, which does not affect the financial statements, which does not affect the user decision. So immaterial misstatements does not impact on the financial statements. So the auditor gives the unmodified opinion, which means it's a clean opinion, nothing to worry in the financial statements, and the auditor states that in our opinion, financial statements show true fair view of the business. Now I am putting a one question in front of you because many students wrote the answer in the exams in a wrong way, or they have selected the wrong report, a wrong opinion. Okay, they have selected the wrong opinion. I am giving you the one example, that is, my example is, if the company has a loss in the financial statements, when the company has a loss in the financial statements and it is disclosed, and the management or client disclosing it in a very rightly manner, in a true and fair view manner, there is nothing wrong in the financial statements, but the company is in loss. So can they give unmodified opinion? Yes. So I am going to tell you the reason. I'm going. My yes means I am not giving the answer. I'm not giving the answer. I am saying, okay, what I was thinking, it was right, because many students are saying, my question was, can we give unmodified opinion? Many students says no. Many students says no. Now here I'm going to tell you the reason. If the company is in loss or profit, if the company has so many problems, but the auditor asked the management to resolve it or adjust it, and management has did it, and management has done what the auditor said, and if the company is in loss or profit, if the company is in a very in a big losses, in a losses, but the management has disclosed it according to the international accounting standards, according to the international standards on auditing, according to the legal laws. So if everything is okay in the financial statements, you should give unmodified opinion. Unmodified opinion. Sorry. So there is no linkage between the profit or loss and with the types of reports. Okay, when the financial statement shows the when the financial show statement prepares according to the standards, there is no material misstatements. If the material misstatements was there and the auditor resolved it, management resolved it, then the unmodified opinion will be given. Now come to the second type of report. Now come to the second type of report, second type of opinion, that is modified opinion. There are two types of opinion, that is unmodified and modified. Now come to the second type of opinion, that is modified. Modified opinions can be given in three ways. Modified opinion can be given in three ways. In three ways. Number one is qualified opinion. You will give the qualified opinion. Qualified opinion means where when the auditor gives the qualified opinion, when the material misstatement in financial statements but not pervasive. What is pervasive, we are going to discuss in a slide, in a next slide, or or at the end of the slide. So when the misstatement is material but not pervasive, we will give qualified opinion. So when the auditor is unable to obtain sufficient and appropriate balance of the matter, and that matter is material but not pervasive, in these two scenarios, we will give the qualified opinion. What are the wording of the qualified opinion? Auditor states that except for the matters highlighted in the basis for opinion paragraph, except for a single matter, or you can say there is only matter which is material, which is material, which is a material misstatement, but the management does not correct it, but the manager does not convince with the auditor to adjust it. So when the misstatement is material but not pervasive, or you can say when the matter of which you are not getting the sufficient and appropriate evidence, if the matter is material but not pervasive, you will give the qualified opinion. So in that case, auditor states that except for the matter highlighted in the basis for opinion paragraph, well, means only one matter, only except for the one matter which is highlighted in the basis for opinion paragraph, financial statements show true and fair view of the business. So this is all about the qualified opinion. This is all about the qualified opinion. So so everyone can understand what is the meaning of qualified opinion. Now we are going towards the second type of opinion. I'm using the word opinion, not report. So what is the second type? Second type is adverse opinion. Now I'm going yes. Adverse opinion is when misstatement is material and pervasive in financial statements. Now, what is pervasive? Pervasive is anything that affects the multiple account balances and cases of transactions. Means now here you need to understand what is pervasive. Here you need to understand what is pervasive. When there is something which affects the any transaction, you can say any event or transaction which can which turn the face, or you can say which change the face of the financial statements or the multiple balances, multiple account balances. So I will give you the example. I think I'm speaking very loudly, huh? Okay. Anything which is any amount or any transaction or any event which is very material and as well as pervasive. Pervasive means that amount, that transaction, that event, if occur, will totally change the shape of the financial statements or change the shape of the multiple account balances or multiple account balances or ability to turn the profit into loss. I will give you an example. Very suppose now I'm giving you the one example, which is also the official case, published case. There is a giant of a textile company, of a textile industry working in a country. There is a giant. There is a giant who is working for who is working in a textile industry, and everything is going well. Everything is going well. So in a someday, I'm just trying to understand you the example. So on in a day, in some day, that giant is delivering a very big delivery of the textile related products, and you can say the delivery contains about 300 loaders, 300 big loaders, 300 big containers. It's a very big delivery for the company, but on that day, one political, you can say, one the the conflict between the two political parties were exist, and they were fight on the roads, the people of these two political parties, of these two political parties. So on that way, that delivery based on 300 containers are on the same way, where the you can say they were fight together. So the situation was very worse. So due to the fight between the two political parties, these the persons of the political parties make a fire, or you can say put a fire on these 300 containers, and all containers were damaged, destroyed, because of the conflict between the two political parties. This is a very big delivery, because the company had taken the specifically loan to complete that delivery, and that delivery is going to an international country, and that delivery is going towards the international company of the of a someone country, where of some country. So the delivery will not place on time, so that international company will also ban that manufacturer whose trucks were damaged due to fire, whose trucks were far damaged due to fire. So that company were banned as well as fined by the international courts. Their reputation in a day will become worse from the very good reputation, from the very good reputation. So if the management, but management did not disclose in their financial statement, so that matter is material and pervasive as well. So that matter is material and pervasive as well. So if the management, now listen to me carefully here, listen to me carefully, I'm deep freezing you here. If the management does not agree from the auditor to disclose it within the financial statements, then you will give the adverse opinion. If the management disagree with yourself and they are not going to disclose it in the financial statements, then what you will do, you will give the adverse opinion, you will give the adverse opinion. Now I'm going to ask you one question. If the management agrees to disclose each and everything in the financial statements, if the management agrees to disclose each and everything in the financial statements, then what would be the report auditor should be given? Then what would be the report auditor should be given? What would be the, everyone please write down, everyone please. Ruhaina, why qualified? Yes, everyone is right. Yes, please write down your feedbacks. Yes, if the management is agrees to disclose each and everything in the financial statements, then you need to give unmodified report, unmodified opinion. Sorry, you need to give the unmodified opinion. If the auditor, if the management agrees to disclose each and everything regarding the damage of their deliveries, regarding their reputation, regarding their ban issue by the international countries or the international companies, if they disclose each and everything, then it would be a more unmodified opinion. If the management does not agree, then the modified report and adverse opinion will be given. Okay. Adverse opinion will be given because matter is material and pervasive. Yes, Namra. Unmodified mean there is not an issue in the financial statements. Issue means it is not issue related to the profit or loss. It is not related to the issue of goodwill. The issue is related to the misstatement by the management. If the management does disclose each and everything, like we are on losses, that the company has banned us, we are on a huge loans, if everything is disclosed by the management according to the international accounting standards, then it means there is no issue. That it means there is no issue in the financial statements because management had disclosed it. Here issue means the management intention. If the management misleading you, it's the issue. If the management does not, if the management does not misleading you and telling you each and everything is right, and telling you each and everything is right, whether it is a loss or a profit, whether it is a question of goodwill and other thing, then it means that the financial statements, it is clear. If the management is disclose each and everything, but if the management does not disclose it, does not agree with the does not agree with the auditor, then there is a misstatement in the financial statements, that the that record is showing something else, that the record is showing that company is in losses, but management does not uh, in real companies in losses, or management is not agree to show whether it is in losses. So you should be given the adverse opinion when the management disagrees you. When the management disagrees, then if that disagreement is material, if the management does not agree with you, if that misstatement is material, not pervasive, then qualified opinion. If the matter is material and pervasive, so and management does not agree, then you will give the uh, adverse opinion. Give the adverse opinion. So now we are going for the third slide, and where the auditor says that think, or the financial statement does not show true and fair view. Now, third is the disclaimer. There are three types of opinion. One is qualified, two is adverse, third is disclaimer. Disclaimer of opinion. Disclaimer of opinion. Same criteria for adverse. When the auditor is unable to gather sufficient and appropriate evidence, so evidence, and that matter is material and pervasive. What is the difference between the adverse and disclaimer? Here management got the evidence, but the management disagree to remove the misstatement. When the management disagree with the auditor, but the auditor got the evidence and the matter is material and pervasive, here auditor is unable to gather sufficient and appropriate evidence and that matter is material and pervasive. Here the auditor gave the disclaimer of opinion that they are not going to give to do the no, they are not going to give an opinion. They will give the disclaimer of opinion. So you need to remember the three types of report. You don't need to remember how to write. You need to remember the type of opinions and the elements of reports. You don't need to remember how to write down the opinion. How to write down the opinion. You just need to remember at what case you will give which type of opinion and how many opinions they are. Okay. Now this is the second last slide, and after the completion of the slides we will go for a break, but we are just completion of the slides, after the completion of the slides. So now, way of changes in the report and why. If we are going unmodified, now we are talking about the unmodified. uh, Now I will give you the difference, tell you the difference here, or mm, okay, here. Now, way of changes in the report. Now I am talking about the report. Okay, now I'm talking about the report, not the opinion. If we are, there are two types of report, that is unmodified report and modified report. Unmodified report means unmodified opinion. Unmodified report means unmodified opinion. Okay, but report includes, there are many other matters. In the unmodified report we will give, now listen to me carefully, in unmodified report we will give unmodified opinion as well as other elements of the report which we have discussed in the last few to four slides. So in the unmodified report, we will give unmodified opinion with the other elements of the report. But I am going back. So this is the elements of the report. Here, if we are going to unmodified report, we will give all elements. We will write down the all elements. Auditor will write down the all elements of the report, and the opinion paragraph will be your unmodified opinion. So your opinion paragraph will be your selected opinion. So do you understand what is meant by unmodified audit report? Do you understand what is meant by audit report, unmodified audit report? Need more feedbacks? Please hurry up. Very slow. Please hurry up. We write down the adverse opinion. It is also included in the in your textbook. We write, auditor write down the adverse opinion that the financial statement does not show true and fair view of the business. If there is no material uncertainty, there is unmodified opinion and unmodified report as well. Okay, Hamza, you just not need more feedbacks. Please hurry up, guys. Please hurry up. So, uh, I'm going to the next. So now we have discussed, if we are going to unmodified reports, many elements of the report, and one element is basis of opinion. One element is opinion paragraph, and that opinion paragraph will be your unmodified opinion. Okay, unmodified opinion. Now we are going to discuss the modification. Now we are discussing about the ways of changes. So in unmodified report, and the opinion is also unmodified, unchanged from the standard format, unchanged from the, we will give the report as per the standard. This is the standard format. This is the standard format. This is the standard format. Okay. Now modification can be done in two ways, and this modification is done by the auditor. Remember this, modifications in the report can be done by the auditor. So additional paras, we have discussed about the additional paras. So we can include the additional paras, like we have discussed extraordinary matter paragraph, key audit matter paragraph, other matter paragraphs. So these are the additional paragraphs which the auditor gives, This is the objective of the additional paragraphs. When auditor wants to enhance the shareholder satisfaction or bring extra clarity in the financial statements, auditor include other paragraphs for listed and unlisted company, extraordinary paragraph for unlisted company, and keyword for listed company. So auditor can include additional paragraphs. And what would be the third type, that the auditor modified the opinions. And we have discussed that there are three types of modifications in the report, that is qualified, adverse, and disclaimer. Now, additional paras, examiner can ask you in the question, additional paras, it is not meant to be any error or issue in the financial statement. Additional paragraph paras is included only for the shareholder satisfaction or bring extra clarity in the financial statements. So additional paras, involvement of the additional paras in the financial statement does not mean there is any issue in the financial statements. Now, the second last thing which we need to be discussed, if there is a material uncertainty related to going concern and it is disclosed by the, if it is disclosed by the management, then what opinion would be given? Then which opinion would be given? Which opinion would be given? Clean, yes. If the management, yes, unmodified opinion. If management disclose the material related uncertainties in the financial statements, then it means management, there is no material misstatements in the financial statements, and the financial statements show true and fair view. Then it means the auditor will give the unmodified opinion, and afterwards, if otherwise, we give the otherwise we will give the modified opinions, or you can say qualified, or you can say it depends on the scenario, we will give the modified opinions. Okay, we will give the modified opinions. So Namra, you are asking about the unmodified opinion and report, or we have discussed two types of opinions. One is unmodified and modified opinions. And modified opinion further contains three opinions. So report is the, if this is all about the report, and if you give the unmodified opinion, opinion is the part of the report. If you give the unmodified opinion, then it means you you didn't change anything, and the report name is unmodified report. But if you are giving the modification in the report, then opinion paragraph will also be modified. Modified means financial statement does not show true and fair view. So if the report is if the opinion is modified, then your report is also be modified. Okay, the name of the report is modified. Actually, unmodified report contains all the paragraphs, okay, and the unchanged opinion. Unchanged or opinion means, it is unchanged opinion means unmodified opinion. So when we give unmodified opinion, we didn't change any change in the opinion paragraph. We just say financial statement show true and fair view. This is the standard opinion. This is the standard opinion. We did not change anything. So when we did not change anything, this is the unmodified opinion, and the report name is unmodified. So when we change the wordings of the report, when we change the wordings of the standard report, of the standard opinion, when we change the wording of the standard opinion, and standard opinion is financial statement show true and fair view, and when we change the words of this standard opinion, then this opinion will become the modified opinion and the report will automatically become the modified. Okay. Thank you, Karen. MURGC means material uncertainties, material uncertainties related to going concern. Okay. So you can ask by the examiner, you can ask by the examiner if the material uncertainty related to going concern disclosed by the management, then obviously everything is clear. There is no material misstatement. You will give the standard report, and standard report is financial statement show trend, show and show true and fair view. And if you say that financial statement show true and fair view, this is a standard report. Standard report means unmodified opinion. Standard opinion and standard opinion means unmodified opinion, and you will give the this opinion standard opinion in the unmodified report. Okay. So when you change the words of the standard opinion, like financial statement does not show true and fair view, so does not is the extra words which you involve in the standard report, in the standard opinion. So this modification means you have modified the opinion. So when you modified the opinion, your report will also become modified because of this modification. Okay. Now, what the examiner can ask you in the exam. So, what the examiner can ask you in the exams. This is again a very important slide. First, examiner asks you objective test questions, OTKs. Like you examiner will give you the scenario. You have to read the scenario and then for solve the OT cases and solve the multiple choice questions. And each OT case has 5 MCQs. So you will be given a OT case. From the last terms, from the many last terms, students are facing the OT case related to the reports. Students are facing the OT cases related to reports. So that's the first scenario that the examiner can ask you from the students. So we are going to do the practice of this case as well, but from the last many attempts, this is the OT case is tested on the topic of audit reports. Now second is auditor asks you to criticize or detail assessment of report. I am asking you about the report, but examiner asks you only few times till yet. So what are the criticize or detail assessment of report? Examiner will give you the extract of the complete report. What is mean by complete report? I am asking you about this. Examiner will give you the complete extract of the report. Now, sorry. So second thing which is very important, you don't need to write down the report. You don't need to write down the report. Remember this thing, students. Just took this stress and became afraid, like we need to write down the report, we don't know how to write down the report. Oh, suddenly lose the temperament and failed. So you don't need to write down the report. Remember it, you don't need to write down the complete report. You just need to find out the findings in the extract. Now What types of findings in the extract? What type of findings in the extract? Obviously, it's a good question if someone has asked, but I have asked from you. Suppose, okay, I'm not asking to anyone. Just to find out the findings in the extract. So, for example, I'm giving you the example that the extract was given of, and a complete report is given. But what can be the problems? Maybe the sequence of the elements is wrong. So you need to mention that the sequence of the report is wrong. Here, what is wrong? Structure was the same. You need to identify what is wrong and why it is wrong, and how it could be, how we can correct it. So if the sequence is wrong, you will say, suppose the addressee is on the space of title, and title is at the space of addressee. So you will identify that the exam, you will write the answer that the title should be first on the report and then addressee after the title. So what you need to mention is, first you will tell that the title is on the space of the addressee, so it is wrong. Okay, so you need to identify what's the problem. You will mention in the exam that the sequence of the report is wrong. Then why it is wrong? Because according to the standard format of the report, your title becomes first and addressee becomes after the title. So this is the right treatment. So this is the right treatment. So you need to mention the you need to examine the extract. You don't need to write down the report. You just find out the findings in the extract. So sequential order was wrong in question. You will criticize it. You will not need to rewrite down the report. Now, what would be the third scenario you will face during the exams? Can examiner given the case and ask you about the impact on the report, impact on opinion, and impact on financial statements. Now these are three things. What and these are three things. These are three things, and it is very easy. You need to understand. Very important thing. You need to understand what is the difference between the report, impact on opinion, and impact on financial statements, and impact on financial statements. So who knows what is the difference between these three? Who knows what is the difference between these three? Okay, we are going to the break after this. Just we are going to the break. Please, need 5 minutes more. Tell me what is the difference between these three. It is very important. After this, we will go for the break. Anyone knows the difference between these three? Yes. How many students knows the difference between these three? Now I'm going to give you the example. Okay, don't worry. I know you need a break. I know. So, but I'm just giving you the difference. But I will explain you in a very stable manner. If there is an example, like I will, there is a R&D expense, research and development expense, R&D expense. I'm not writing down the amount. I'm just saying it is 20% of the profit after tax. The what would be the standard threshold? that is 5 or 10%. But R&D expense is the 20% of the profit after tax, which the management capitalizing it, the management capitalizing it in the cost of, in the cost of, it's the management capitalizing it in the cost of non-current assets. Okay, non-current assets. Auditor found that this expense is not the part of, is not meet the criteria, does not meet the criteria of capitalizing the cost. So R&D expense is 20% of the profit after tax. Standard threshold, our standard threshold is 5% or 10%. Okay, 5% or 10%. Okay, so mind comprising in the cost of non-current assets, but auditor found that this expense is not meeting the criteria of capitalizing cost. So if the management agrees with the auditor, then obviously unmodified opinion will be given. Now I'm going to tell me what it means, that the difference between the impact of report, impact of opinion, and financial statement. So you will say that if the management does not capitalize it, if the management does not capitalize it, then what would be happen? Then auditor will give and if it's suppose if it's a material matter, not a material not a pervasive material misstatement, then the auditor will give qualified opinion. Qualified opinion. We have discussed this. Okay, matter is material misstatement, material but not pervasive. Okay, so we will give the modified opinion. I'm highlighting this. Auditor will give qualified opinion. And what about the report? Qualified opinion is the part of modified report. Okay, so auditor will give qualified opinion and modified report, in which, due to which financial statements, you can say non-current assets in the financial statements are overstated. So we have given the answer on three things. On the opinion, auditor will give the qualified opinion, and qualified opinion is part of the modified report, and the impact of the financial statement due to which non-current assets in the financial statements are overstated. Now you people understand what the meaning of these three things. What's the meaning of these three things? Hamza, I'm just saying that it's not pervasive. Obviously, 20% if the company's profit will be, obviously non-current will be reduced, but maybe the picture is not changing. So it will depend on the whole scenario. Okay, so you people got understood what are the opinions and what is the difference between the opinion, report, and financial statements. So that's our topic. I have tried very best to give you the understanding of this topic. Now there is our 10:36. We will come back at how much time? After 15 minutes or 20 minutes? How much time do you require? Okay, 15 minutes. Good. So we are coming back after 15 minutes. Hello and welcome back. So, are you back? Are you back? Please confirm. So I'm just waiting for uh, next 1 or 2 minutes so that we are uh, because we are working as a team, so we should take care of everyone. Because obviously it's we have taken 2 hours continuous session, so everyone is going to get up for free to get up fresh. So we are just waiting for a minute. Okay, so so we are going to solve the question. We are going to solve the question, and please open the question. Break is over, and I think okay. Greenfield is a good question. Basically, it has some variety of MCQs. So we will discuss greenfield question. Okay. So I am going to study the question. Okay. Everyone has a handout. So if you do not have the handout, the question is open on the screen, and I'm already sharing the screen, so you don't need to worry at all. Uh, if someone does not have any handout, send me a message on WhatsApp. I will provide you. I will email you, and I will also send the PowerPoint slides as well. So we are going to start the question. The audit team has already carried out some procedures. Oh, it's an answer, I think so. Yes, yes, it's an answer. Wait, I have opened the answer. Mm, yes, this is the question. Yes, yes, this is the question. So, Greenfields company specializes in manufacturing equipment, manufacturing equipment which can help to reduce toxic emissions in the production of chemicals. The company has grown rapidly over the past 8 years, and this is due partially to the warranties that the company gives to its customer. Means the company, the reason of the company's rapidly grown due to its the warranties given to its customers. It's guaranteed its products for 5 years, and if problem arise in this period, it undertakes to fix the problem. Obviously, if they are giving the warranty to fix the problem, it will be fixed free of cost, or if the problem will not be fixed, then it will provide a free of cost replacement product. Very good. This is an example. Otherwise, in reality, in many cases, it does not happen. You are the manager responsible for the audit of Greenfields company. You are the manager responsible for the audit of Greenfield company. You are performing the final review stage of the audit and have confirmed across the following reasons. Okay. So you are the manager responsible for the audit. So you are at the final review stage of the audit and you have faced some issues. Okay. First, what was the first issue? Greenfield company has a material. It mentions it is a material. Receivable balances owing from its customer. Yellow mix, obviously it's a customer, so there is a material amount receivable from the yellow mix. So, yellow mix is a asset for the greenfield company. During the year-end audit, your team reviewed the aging of these balances and found that no payment has been received. No payments has been received from the yellow mix for over 6 months. For over 6 months, and Greenfield Company would not allow this balance to be circularized. So you are not allowed to take the direct confirmation. So if you are not allowed to take the confirmation from the client, what it means, like you are not allowed to take the sufficient and appropriate balance. So you are not allowed, so you are unable to obtain sufficient and appropriate balance. So instead, management has assessed your team that they will provide a written representation confirming that the balance is recoverable. So management will give the written representation. Remember one thing, representation will only work, representation letter will only work when there is no other evidence is available. When there is no other evidence is available, when there is no other documentation, no supporting is available. I am not saying that management will not allow you to take the evidence. It means that when the evidence is naturally not available, okay, when you can take the representation. If management is to stop you to take the evidence, and in that case you are not allowed to take the representation. So when the evidence is naturally not available, then you can take the representation. So that's all about the scenario. So what's the question says about this? So now our first MCQ is, assuming you receive the written representation as described above. I think it's a warranty we have to read the paragraph of warranty provision as well. The warranty provision included within the statement of financial position is material. It is also material. The audit team has performed testing over the calculation and assumptions which are consistent with prior years. Warranty means like you are giving the warranty to its customer based on the future. Like in future, if your equipment will have any problem, company will fix it. Now you can now do you have any evidence? Do you get any evidence that how many customers will become in future to fix the problem? Obviously you do not calculate it, you do not get any evidence, because it, no one can predict the future. So if I take the product, how the company knows that my product will become faulty and I will be available to fix that problem? and a company will not also be protected. So in that case, no, naturally no evidence is available. I'm just explaining the line. The audit team has performed testing over the calculation and assumptions which are consistent with prior years. Okay, they are consistent with prior years. Assumptions are consistent. The team has requested a written representation from management confirming that the basis and amount of the provision are reasonable. Management has yet to confirm acceptance of this representation. Management need to give this representation letter till yet. Okay. Now, assuming you received, assuming you receive the written representation as described above for both receivable balances and the warranty provision. Okay. In respect of which balances is the auditor most likely to conclude that sufficient appropriate evidence has obtained? Read the requirement carefully. Like if the like assuming that we have received the representations in the cases of warranty and in the cases of receivables. So both receivable balance and return in respect of which balances is the auditor most likely to conclude that sufficient appropriate balance has been obtained, means examiner is interested to ask you if you have taken the written representations in both cases, like in the receivable and in the warranty provisions. So what do you think this evidence is suitable for which case? It is representation is suitable for receivable or for warranty or for both. Now one option is receivable balances only, warranty provision only, the receivable balances and warranty provisions only, neither the receivable balances nor the warranty provision. Now you tell me what's your answer. Method and path, you are not okay, okay, okay. Okay, okay, Namra, you back? Okay, okay, you are right at this time. Or anyone else, please give me your feedback, guys. If you are wrong, don't need to worry at all. Mostly students are right. Need more feedbacks. If anyone is remaining, please enter your answer. Suppose if you are sitting in the exams. So if I will give you the explanation I told you during the answer during the question discussion guide, in the case where the evidence is naturally not available, and for that scenario you can take the written representation letter. So I told you warranty, in that case you cannot take any evidence like how many customers will become to claim the warranty. Suppose you buy the product from the company. So do you know that your product will become faulty after 2 or 3 years, or company can analyze it how many customers will become to claim the warranty to claim the warranty. So you do not have any evidence. In that case, you can take the written representation letter that the warranty provisions regarding the warranty provisions, the amount regarding the amount of the warranty provisions which are showing in the financial statements. On the other case, you can take the evidence from the receivables. You can send the direct confirmation letter. You can send the indirect confirmation letters. You can send positive and negative confirmations. So you can go and check physically to ask the receivables like, do you owe the money? So there are many other methods, but on that case, on the other case, warranty periods, you do not go to the customer and ask you your product will become faulty after 2 years. So no one will tell you. No one can predict it. So I think a receivable balance is only, it's a totally wrong. Where warranty provision only, uh, warranty provision only. So I think in that case the answer is right. So representation only suits to the warranty provision. Receivable balance warranty, no. Neither the receivable balance or no. So option B is the right option. So do you understand the logic? What I am giving you behind taking the representation letter? So do you understood? Okay. Now comes to the second part. Second MCQ. Which of the following audit procedures could the audit team carry out to obtain independent evidence relating to the recoverability of the debtors from yellow mix company? वो जो the balances which the yellow mix has to pay to the green field. So which audit procedure, which of the following audit procedures could be carried out to obtain evidence? So these are the four options. Review correspondence with yellow mix regarding the late payment. It can be a procedure. You know what type of procedure is it? It's a add-on procedure. You can say review the minutes or review the correspondence. Yeah, I have mentioned that two types of procedure: discuss with the management and review of the minutes of the meeting. These are the add-ons procedure. So review correspondence. It's a procedure. Trace a sample goods dispatch note for yellow mix to sales invoices. Okay, it will conduct the occurrence. Okay. Trace the entries in the yellow mix account in the receivable ledger to invoices and remittances. Okay. Review post year and cash receipts. Okay. So first tell me what is the very very best and suitable procedure to getting the independent evidence. First tell me the first procedure, only one procedure, so that we can filter the options. So that we can filter the options. What is, tell me the one procedure. Which procedure? Yes, review correspondence regarding the latest payment. This is the procedure you can be confident. So number one. So what are the options are available? One and two, A and B. So A and B, there is a one option. So you have to select one option. So now you need to compare between two and four. Trace and a sample of goods, dispatch notes for to the sales invoices. Okay, and four, perform a review post year and the cash receipts. So we are talking about the receivables, cash receipts. No, so I think A answer is the right option. A answer is the right option. Trace a sample of good dispatch note provides the evidence of completeness and occurrence. So answer B is right. 1 and 4, or option A is right, 1 and 2. So which option is right? Option 1 and 2 and 1 and 4. A, A. Oh. Gee, need more feedback. I'm seeing your replies. Now, most of the students now. If I will give you a focus, like we are obtaining the evidence of the receivables of the receivables. So Our receivable balance is not cleared yet. It means the balance may be a fake, the balance may be maybe non-genuine. So you need to confirm the completeness and accuracy, because it is based on the financial statement. So if you perform a review post year end cash receipt means it's not end cash receipts, because examiner always asks you cash receipts means it's a bank balance. A cash receipt of any type, it can be a bank balance, it's a cash receipt. So if you review the post year end cash receipts means if you are doing the audit of the 1st July 19 to 30th June 20, you will check after the June before going the report, before issuing the report, if the entries are if the entries, because you are at the reviewing stage. So if you will after the end but before issuing the report, if you will see that the receivable balance is reducing, or or the company is receiving the balances, so it will get the more accurate balance. Two is wrong, because it will only occurrence, it will not ensure you the accuracy, it will not ensure you the accuracy. Now we are going for the third option, and then four and fifth is the audit opinion. I think we are going towards the 179 option, 179 question. You have discussed the matter with management, but I think would complete the question first. We have read it. Uh, Now, other information. You have reviewed a financial summary which is to be included in the annual report, a financial summary in the annual report, and have found that the details are inconsistent with the financial statements. So this is talking about the financial summary, not about the financial statements. Your investigation have shown that the error is the summary and not in the financial statements. Okay, so now we are going towards the question. You have discussed the matter with the management, but they are still not prepared to provide the representation you have requested. Management is not interested to give the representation on which matter it is mentioned in the question. This management has yet to confer acceptance of this representation. So management now disagreed to give the representation on the provisions. So we have it is mentioned in the question that the matter is material. Okay, so when the matter is material, so it is not mentioned that the matter is pervasive. Okay, so we have given adverse opinion when the matter is material and pervasive, so this option is not relevant. Now management is not giving the evidence, which is the representation letter. So disclaimer we will give when the matter is material and pervasive, but this warranty is not pervasive. That's why disclaimer is only given when the matter is material and pervasive, and disclaimer opinion is given when you are unable to obtain sufficient appropriate evidence. Here this option is matches, but we cannot give the disclaimer because warranty is the material but not pervasive, so this option is also not relevant. Qualified opinion is only shows when you get the when there is a material misstatement and you got the evidence about the misstatement. So qualified option is also not relevant. So only this option is relevant, that is the qualified opinion due to qualified inability to obtain sufficient and appropriate audit evidence. Inability to obtain sufficient and appropriate audit evidence. Okay, now there's a last question. Yes, Sahar, you are right. Hamza, you are right. Sahar, Harshani, Irshad. Okay, Stephanie. Okay. Now giving more feedbacks. Do you understand this MCQ? Do you understand this MCQ? Okay. Thank you, everyone. I understood it. Thank you. Good. Now we are going towards the last MCQ. You have notified that the directors of do you notify the directors of the error in summary financial statements? Which of the following correctly summarizes the impact on the auditor's report if the directors do not correct this error? Directors notified you, but the directors are not interested to correct this error. But please understand the nature of the error. This will you will give the answer of this question. You have received a financial summary which is to be included in the annual report and have found that the details are inconsistent with the financial statements. Your investigation has shown that the error is in the summary and not the financial statements. Okay, not the financial statements. Now, what should be the answer? I'm going to remove all. So, yes, first option is modified. Other information section stating that there is nothing to report. Obviously, error in the report, but it should be given in the report because it is wrong. Obviously, we have to give in the because we have to tell to the users of the financial statements. Now, here I am going to remind you one thing. If the company is listed and you need to identify some you need to give some extra information which is very important and you want to give more clarity to shareholders. Remember, we discussed this thing. Yes, additional paras, EOMP and CAM. CAM is used for listed company and EOMP used for unlisted company. But ये कब हम use when we use this when we will use this paras when the auditor want to enhance the shareholder satisfaction or bring extra clarity in the financial statements. But there are other if the information is important and company is listed. Listen to me carefully in my last two lines. Very important. If the company is listed, key audit matter paragraph. Focus on the name. Key audit matter. Key audit matter means a very important information. If the company listed and you want to give the clarity to the shareholders, then you will give CAM. And if the company is not listed, but the information is very important, then you will give extraordinary matter paragraph. But when you give the information to the satisfaction of the shareholders, but the information is not important, but when the information is not so much important, when the information is key, not key audit is not key audit matter, when the information is not necessary to give the emphasis, but you would like to give the information in the report, then you will use the other information paragraph. Other information paragraph is used for both listed company and unlisted company. Other information paragraph is used for listed and unlisted company. Key audit matter paragraph is used for listed and emphasis of matter paragraph is used for unlisted company. So other information paragraph is used for both type of companies. So now last thing I'm coming to the end. This is not meant to be any error or issue in the financial statements. Now we are going towards the Modified other information section stating that there is nothing to report. We cannot write this thing. If there is nothing to report, then why you are giving the disclosure in the other information paragraph? Okay, this option is wrong. Modified, you will give the disclosure. Other information section would not be required as if nothing to report. Again, okay, there is nothing to report. If there is nothing to report, okay, then why we are giving the modified report? Yeah, modified opinion. But then why we are giving the modified opinion? Okay, so if there is nothing to report, then why we are giving the modified opinion? So these two options are totally wrong. Now come to this point. If there is an unmodified opinion, other information section including a description of the uncorrected misstatement. So other information section can include description of the uncorrected misstatement. Okay. Uh, so and the D option is other matter paragraph including a description of the uncorrected mistake. So other matter paragraph is the right option for this MCQ. So other matter paragraph including a description of the uncorrected misstatement. So you need to focus that we are not giving the modified opinion. We are not giving the modified opinion. Okay, on the uncorrected misstatement because it is not material misstated, or you can say it is not or not a pervasive element. It is just a summary. So you will go for this. So that's all about the today's session. Now I'm just closing down this session. One thing last, that is uh, about the exam. This is the my LinkedIn profile. As if anyone would like to add me, because if you need any assistance through profile, that's the that's it is with you. My contact number is with you. If anyone is not included in the WhatsApp group, you can text me. Remember one thing, in the exams you don't need to become afraid. You don't need to become confused. You don't need to become confused. Okay, Pratik, I'm telling you, you don't need to you don't need to be afraid. You are now what you should do: critical topics, very important topics we have discussed in these 5 sessions. All topics are going to be tested, which we have discussed in these 5 days. So you need to give more focus, and what you do, your first priority should be to grip that topics by reading the content, by reading the textbook once a time, and then close the textbook. Make the practice of the questions. Make a daily target, like you will do 3 to 4 questions on daily basis, or you can divide it like 2 questions you will done by writing, and you by written practice, and two you will went through verbal discussion with yourself, and then afterwards you can compare it with the answer of the examiner and identify the issues. Okay, so that your time management will also be resolved. Okay, so this is the there are 2 to 3 tricks which you can use. Now now at this stage, when the people are confused, people are listening the webinars of many teachers, of many faculty members. So you don't need to listen, because every teacher has a most of has the same knowledge in most of the areas, but sometimes they are worried because of their opinions. Sometimes they are discussing some different type of case. I'm giving you some other example. So take a one. So if you I have given you the webinars. you have a good frequency, and now your frequency is matched with me, and my frequency is matched with yourself. So see my webinars. If you need any sessions, I am aware, I am available, and uh, do not listen of every faculty member webinars, of every teacher webinars. Now focus on the kid. Even when I was at this stage, I have done the kids maximum, run the kids at least 2 times, and then I think I was completed it like 3 times. I think so, 3 times. So uh, this is a time which you can utilize it in a very positive way. Technical knowledge you have, practical knowledge you have. Now only thing which is lacking, that is the practice, which needed very compulsory. It will clear your technical knowledge, because whenever you will identify, compare your answer with the question, you will identify the issues. So when you'll identify the issues, you will open the textbook to clarify it, so your technical knowledge will get more enhanced. When you will do practice, your practice learning curve will improve, your practice learning curve will be improved. So when your practice learning curve will be improved, your time management will be improved. So when you will not feel hesitant to write down the answer, your confidence level will increase, your temperament will boost in the exams. So when all the things is with you, then no one can stop you to pass in the exam. In this exam, you will defeat the examiner. Okay, you will defeat the examiner. You are all my students, I will be available. My prayers are with you. I will do the prayer specially for all of you. I will miss you. Obviously you are very interesting listeners, you are very interesting students. We keep in touch with me, and best of luck for the exams, best of luck for your exams, and best of luck for your results as well. Keep remember me in your prayers. When the window will close, feedback form will be with you, will appear in front of you. Please give your feedbacks about my efforts, about my knowledge. Give your feedbacks. It's your time. Now the ball is in your court. I need your feedbacks about my efforts, about my time which I've given to you. So best of luck. Remember me. Do not forget me. I will remember you. Take care of yourself. Allah Hafiz, and bye.